provided, and these ones are the offences are clearly stated in the Therefore Act, and their penalties. If you change the interest that you charge or any other information, it could even be information on change in management, change in business module channels of delivery, you notify the authority. Some of these even approve. We approve products as the authority. We also approve change in management, especially appointment of new directors. We do a fit and proper due diligence, then we say it's okay. We give an objection to the appointment of the new directors. But sometimes you receive a letter, they are just notifying you. So when they notify us, we say, okay, yes, thank you for notifying, but we refer them to the relevant section where they are actually supposed to, before appointing, to first inform us so that we carry out due diligence, which we do, and thereafter we take a decision. But it's not about them to. So about marketing and promotion materials, the Therefore Microfinance Institution or a money lender shall ensure that all the advertising and promotion materials are fair, clear, and not misleading. The Therefore Microfinance Institution or money lender shall ensure that the information is written in plain language in a font size not less than 10 points, as I already said. All mass media, electronic, print, advertising, and promotional materials for financial services which make a reference to the interest rate shall include the total cost of credit, whether the interest rate is per annum, per month, and state that they are licensed by Uganda Microfinance Regulatory Authority. And this is, I think, the common practice when banks or even MDIs, microfinance deposit-taking institutions, are making their advertisements. They indicate at the end of it that they are licensed and regulated by Bank of Uganda. Even insurance companies or those institutions which are listed under stock exchange and they are licensed by Capital Markets Authority. So it is important, one, it gives confidence to the public that the institution is actually licensed, but it also may trigger a search because, you know, we are licensing very many institutions. Soon we shall be talking about over 2,000. But we have not even got more circles on board. So if you make such an advertisement and you indicate that you are licensed by Umra, it will help the authority even to do a search and confirm. The public will know whether you are licensed or you are not licensed, whether it's true or not. So I think let's leave the advertisement. We go to another slide. Collateral for the loan, any institution or institution shall not demand or accept the following as collateral for their loan to the borrower: the national identity card, the passport, warrant card, or other documents establishing the identity of the nationality of the holder. We still want to understand how the ATM card or the national ID helps the lender to recover. But now it is a very serious matter. Government is interested, and I think it is a risk on our side as a regulator if we hear that there is an ongoing registration exercise for party members, for whatever party, and you realize that it is coming out clearly that some people don't have their national IDs because they were held by money lenders. For sure, such money lenders are doing everything possible to kill the reputation of the money lending business in Uganda. So you need to work with us, and we bring them to the law, and they are penalized for doing so. So that one we are going to issue another public notice. And if they get to know that you are doing the wrong thing as a lender, you are holding a national ID, it may affect your recovery. Because you cannot come, if you want equity, the lawyers in the house, you come with clean hands. So if you are a lender and your hands are not clean, in other words, you are doing, if you are carrying out offenses which are clearly listed in the law, holding national IDs, ATM card, it is prohibited by law. We issue the public notice in respect to the same, and we will have another one issued very soon. Where it is proved to the satisfaction of the court that the transaction for lending is disguised as a sale transfer of property, the court may nullify. In other words, there is another prohibition here of engaging into instruments of any property or asset such as sales agreement, books signed prior to the disbursement. So those who have products like car books or any other loan, and instead of writing a clear loan agreement and attaching the asset or the collateral, the car as a collateral, anything, it can be a car, it can be a house, it should be indicated that this is collateral. You are not selling. This law prohibits sales agreements and actually clearly states that in the lending business, the enforceable agreements are only agreements or contracts, not sales agreements. But in case the courts find out that you actually transacted through a sales agreement, what happens is that they will pay your principal without any interest. There is also another likelihood of nullifying the contract and revoking the license. That is clearly stated in the regulation. So you nullify the transaction, order the borrower to refund the money borrowed without interest, to revoke the license, and the last one is to make any other orders as the court may deem fit. Next slide. The therefore microfinance institution or money lender shall not dispose of the collateral given by the debtor as a sale, trade, or collateral for the loan advance fee unless 60 days have passed since the written money notice has been issued to the debtor requiring him or her to pay any outstanding money on the money advance. That one I think is already being enforced, but it was not cross-cutting to all other tiers. The therefore microfinance institution or a money lender may dispose of the collateral given by the debtor by way of public action or private treaty without recourse to the court of law. And the therefore microfinance institution or a money lender may, before carrying out the sale of the collateral by public auction or private treaty, undertake valuation and obtain the first sale value of the collateral to determine the market value of the property. Most of the institutions are actually enforcing this. We go to another slide. In respect to compounding of interest rates, now we bring it here to all players, not just money lenders. Compounding interest rate is prohibited to all therefore microfinance institutions and money lenders according to these regulations. But prior, it was only slapped on money lenders. Next. If a lender asks for a guarantor and the borrower has provided someone's name as a guarantor, there is a need to notify the guarantor there is need to tell the guarantor about his rights and obligations that he is supposed to fulfill. An institution may go ahead to tell the guarantor that the person may seek legal advice before acting as a personal guarantor. So this one is aimed at protecting guarantors who have been harassed, especially by the digital lenders who use apps. They enter into the transaction, access all your contacts. The moment you don't pay back, you can call your relative, your mother, your spouse, your boss, or your close friends, and inform them about how you defaulted. But most important, the person whom you are informing is not even aware that you are guarantors to the loan. So that is what this provision is supposed to cure. Next slide. About cooling off period, this one simply means if the borrower, for one reason, changes their mind after entering into the loan agreement, signing the agreement, we are saying that within 14 days, the borrower may nullify the transaction and pay back the money. We are putting a provision of only 14 days. So within 14 days, the borrower has the right to nullify the transaction, but most important, pay back the money, all the principal, and fees and all charges of the loan. Call them administrative costs. But we are saying that yes, 14 days, but they should not, the administrative costs should not exceed 5% of the total loan value. I think that is right. Yeah, the administrative fees charges in paragraph B cannot exceed 5% of the value of the loan. Yeah, take note of that. And the 14-day period provided for under the paragraph shall be calculated from the day the consumer signs the contract and will exclude Saturdays, Sundays, that is the weekend, and the public holidays. So when you are counting the 14 days, you count the working days. But maybe we need to make a correction here. It should be 10 days if that is so. We can review this, because if we are counting only working days, why should they be 14? They should be 10. Next slide. So all this is about the cooling off period, and basically it's talking about how you should inform the borrower that they have that right, how it should be exercised, how you should not exceed 5%, how you should advise the borrower of his or her liability to pay the administrative fees or charges where applicable, and all that. Next slide. There is also a provision for the charges on early settlement. I think the difference between the cooling off period and early settlement is that the cooling off period, you may have actually not utilized the facility. It is just a short period. Here we are saying 14 days, but sometimes it can be a week. But early settlement, you may have served your loan, which was supposed to be for 6 months, and you have served maybe 4 months, and you want to settle the loan. And we are benchmarking with the central bank. We are not doing anything different. We are saying that, notwithstanding any other paragraph in these regulations, the borrower may settle their loan at no extra cost. Save for any outstanding interest at the time of early settlement. So you sit down, if it was you even stand up, but it's a matter of agreeing the rent and the borrower, and you say you are supposed to pay for 6 months, now you want to settle the loan early, so what are the terms and conditions in terms of settling the loan? Here we are guiding under the regulation that you only charge interest on the outstanding and no extra cost. And I think that is what Bank of Uganda and the Uganda Bankers Association. Yeah. Okay, loan product offers, notwithstanding all other products, the credit provider who provides payroll lending, the salary loans shall not charge fees, interest, and any other charges beyond the principal amount lent out for any loan in the Yeah, that's why we invited. The Uganda Consumer Lenders Association. The members of that association, most of them, they do payroll lending, where the loan repayment they deduct from the source. But we have seen situations where continuous deduction happens even when the loan has been settled. And we have tried to handle those cases, and most of them have been resolved. And we want to thank the Uganda Consumer Lenders Association. And I see the legal advisor to most of the payroll lenders. I want to recognize you. Platinum, Bayport, Lesego, all those are members. Warimu. So, notwithstanding all these other products, the credit provider who provides the payroll lending salary loans shall not charge fees, interest, and any other charges beyond the principal amount lent out for any loan period selected. Next slide. Now, credit collection measures and practices. We don't intend to stop lenders from recovery, but I think in most cases you go beyond what should be done professionally. First of all, I'm not referring to all of you by now. I'm referring to those who have fallen victims of this. Yesterday, we had a session where the minister launched here at the same hotel. The minister launched the digital lending guidelines with a view of curbing down the current public outcry on data abuse by the lenders on who use digital apps. And the head of the Office of Personal Data Protection under NITA shared an experience which was very, very, very bad and touching and inhuman, where one of the lenders who use apps accessed information on the borrower's phone, picked some information which me personally not want to share, but at the point of default, they were threatening to share all those details that they got on the phone with the public, with the relatives, with their offices. I don't want to mention the information. I can see a camera there. And there is someone be capturing it live, so for sure. But somebody had the courage to share the information, and it is very, very bad. It is bad. You can imagine some people, I don't know what they keep on their phones, I don't know. But somebody, the lender said, I'm going to share all this information after accessing all the information. So there was a whole detailed discussion on how Umra can work with the NITA, that is the Office of Personal Data Protection, to work with CID, to work with Financial Intelligence Authority, to tap into these issues of personal data protection. So it is not necessary, as stated in this regulation, to do the following: to use threatening or to use violence or other criminal means, physically harm the persons or the reputation of the person when you are recovering the money. It is not necessary. What is necessary is for the lender to carry out due diligence and proper appraisal and understand the creditworthiness of the person we are going to lend the money. That is what is necessary. But it is not necessary to threaten or use violence or unethical means to recover the money that you lent to me at the back of your mind, knowing that I'm not going to do what? To pay it back. And now the authority is coming in to provide the credit information sharing mechanism. We will share that at another forum where we will be able to update you on how far we have gone in ensuring that all the Tier 4 microfinance institutions and money lenders can submit information of their borrowers such that when a lender is to issue out a loan, before doing so, you will have searched and know the creditworthiness of the person you are going to lend to. That one is also one of the measures which the minister wrote or informed the president that instead of capping interest, we are going to ensure that all Tier 4 institutions also join the credit reference mechanism. The Bank of Uganda regulations allow that. We have worked with Bank of Uganda and the CRBs, and we have trained our licensees. We are carrying out a pilot. We have taken some of the licensees through the accreditation process, and soon we shall roll out and ensure that all of you, the lenders, will be able to be part of the CRB, so that you manage your risk instead of using obscene or profane language that you want to recover in some of the content. Making unauthorized and solicited calls, social media channels, or messages to customers contact, improper and questionable debt collection tactics and methods, any other conduct whose consequences is best harass, oppress, or abuse any person in connection with the collection of the debt. So please know your customers diligently and be able to recover professionally. That is what this provision is trying to address. Still on credit collection, the loan turns delinquent if the loan turns delinquent and the recovery agent has been assigned to the borrower. The particulars of the recovery agent or the recovery agent assigned must be communicated to the borrower, and this can be done through emails, SMSs, before the recovery agent. The borrower should be able to know who is coming to collect on behalf of the lender. Some money lenders and other players have mentioned that if you let the borrowers know, you will never find them. So they hijack and they don't have to notify you. But the regulations now are strict. So we need to manage our credit risk, because these regulations are prohibiting some of the practices which are genuinely used to recover, where you find that it is really very hard to recover. So here we are being guided. You would rather manage your portfolio risk. You have it, don't lend to everybody. You have problems with these regulations. Besides, the Tier 4 microfinance institution or money lender also needs to provide to the borrower the names, details of the internal agents at the time of sanctioning the loan. All of those agents that are authorized to contact the borrower when there is a default will be recognized in that respect. Next. Now this is about the exchange of credit information, which I talked about, that it will soon be mandatory. This provision is hinged under the Tier 4 Microfinance Institutions and Money Lenders Act, Section 82L, where the authority is supposed to establish a credit information sharing mechanism for Tier 4 Microfinance Institutions and Money Lenders. This is a journey we are going to work with all our licensees. First of our institutions to provide credit information to the bureaus, to all credit reference bureaus, as indicated under the Bank of Uganda regulations, helping the licensees to understand the accreditation criteria, who should be the accredited credit provider as per the regulations. All that process we will take you through. But the ultimate goal is to have everybody providing credit rolled into the credit information sharing mechanism, which we have drawn. We have its structure so far. We have it as a switch where you will provide information to Umra. It is accredited from the switch. And then we subject it to all the tests: credibility, validity, integrity, and once the authority is comfortable, we are working also with the SIPA. SIPA, you already told you, the Credit Information Providers Association. We will be working to make sure that we have a robust mechanism which will enable all credit reference bureaus to pick information, and then we have it integrated such that if a lender wants to lend money, they are able to look at the credit history of their clients, and then they decide whether they should transact with them or not. Next, we have already talked about issues of transparency, ensure that information given to the borrower, whether in writing or electronically, to orally is fair, clear, and transparent. Ensure that the information is easily comprehensible so that the borrower can make informed choice about the product or service. Ensure that the information is written in plain English or other official languages in a font not less than 10. And where the borrower doesn't understand English or other official languages, the provider of credit should ensure that it is an oral explanation or written to the consumer so that you help them understand. Otherwise, how do you transact with somebody who doesn't even understand the terms and conditions, and you have not interpreted even orally or in writing? Next slide. Next, it is all about disclosure, this one. Next one. Yeah. Transaction receipts. If a borrower pays back, you should issue a receipt. So the Tier 4 Microfinance Institution and Money Lender shall generate or issue a hard copy receipt or an electronic receipt or instant message to acknowledge the transaction is carried out by or with their borrower. Still, this is under transparency. There should be a receipt for any payment made, so that at the time, in case there is any complaint or anything to do with not agreeing on what is the transaction and what is going on, you should be able to present evidence and say these are the receipts. If it can be electronic, it can be non-electronic, and with dates and amount that was paid and acknowledgement. Next. There is a whole provision of complaints handling and borrower diligence mechanism. And it is structured in a way that these regulations we require every credit provider to have a credit handling mechanism at the level of the institution. Let's say if you are Platinum or Bayport or any circle, you should be able at your office to have a mechanism of receiving complaints and handling them in a timely manner. The provisions under the regulations provide for feedback within 14 days. But there is also complaints handling mechanism at the level of the regulator. So where you fail to agree with the borrower in regard to the complaint logged in, instead of threatening the borrower that should you go to Umra, should you complain to any other person or authority, you will see. Instead, the regulation requires you to inform the borrower that actually you are not satisfied with my level of complaint handling. You can go to Uganda Microfinance Regulatory Authority to seek recourse. That is provided for in the regulations. Let's try. Complaint procedure, therefore microfinance institution shall have in place an appropriate, this is what I talked about. Next slide. Next. Keep the complainant informed. The credit provider shall, on receiving complaint, provide the complaint with prompt written acknowledgement in hard copy or electronic means, such as SMS that they have received the complaint and the institution is dealing with it. However, the lender needs not to send a written acknowledgement where it will resolve the complaint. In case the complaint is handled, there is no need for sending the written acknowledgement. The complaint is resolved where the complainant has indicated acceptance of the response from the entire former finance institution or the money lender. Next. There is a time limit, as I told you, 2 weeks, to ensure that there is feedback to the complainant, whether the complaint has been resolved or not. Next. Next. Enforcement and administrative sanctions. The authority shall impose administrative sanctions with regard to the entire microfinance institution or the money lender that fails to comply with the Act and these regulations, or its directives and any other regulation or guidelines for enforcement against the entire microfinance institution or money lenders. And this can be, these sanctions can be imposed to the board of directors, to the management, or its officers if it is related to non-compliance. Next. So basically, those are the key provisions under the regulations, but it is well detailed. We will have, in terms of the way forward, one, we will solicit your input to finalize these regulations. The regulations will address the market abuse as an alternative to capping interest. We need to select a working committee. I think we will be guided by the executive director, who should be on that committee to stay behind. Not everybody may need to take more. We need to have a composite team, technical, representing all stakeholders, and work on the document and make sure that the input given by this audience is considered. And then we shall be handing it over to First Parliamentary Council for legal drafting. Before I conclude, because I told you that this was a consultative process, and we have gotten feedback already on these regulations, and I have gotten permission from the representative of the Uganda, from the law firm that is representing their client, who is the Uganda Money Lenders Association. I've been permitted to share the feedback, which is formally written and addressed to the executive director. We received this morning, and they are in the house. We have the Mwesugwa Rukutana and company advocates here. Stand up for recognition. Then we have the representative of the Uganda Money Lenders Association. Umra is on the high table, and this is their feedback in summary. We refer to the above caption subject, that is the regulations, and then they are referring to our letters inviting them for consultation. And then they gave the background of the Therefore Microfinance Institutions and Money Lenders Act, particularly section 84.1, where the Act prohibits carrying out business as a money lender without money lending license. The law recognizes the business of money lending as a legitimate business and a key player in the financial intermediation industry. Before the commencement of the Therefore Microfinance Institution and Money Lenders Act, money lending business was regulated by the Money Lenders Act Cap 273. I think that is the Act of 1952. And the Act capped interest rate at 24% per annum. The regulation was obeyed more in breach than observance. By the end of our presentation, we shall demonstrate to you to your esteemed office, I mean the regulator Umra, that capping interest rates on money lenders at exclusion of Thank you. He's offering to summarize it. Actually, he's the one who wrote, so he wants to summarize it. I think that's good. You can summarize it for members. Yeah, because it is important, before we open up the discussion, we first know the input already provided by Umra.
Thank you so much for the great presentation. The ED Umra, heads of different government institutions, fellow colleagues, ladies and gentlemen, it's a great opportunity that us as money lenders appreciate to come and participate in this engagement. My name is John Kandwanaho. I represent the chairperson, Umola, who is not around. But it's for good cause. So we have very pertinent clauses that we thought we could highlight in this draft that needs to be looked into and revised accordingly. So I'll be very, very brief on the clause and what we propose, because we don't want to tear down the clause without proposing a solution. So we shall be highlighting a clause, the challenge with the clause very briefly, and then what we propose. There's clause number 3 in the regulations. Now, this clause majorly highlights the regulations themselves. If you read through, they do not categorize different lenders. Because, the Act is Tier 4 Microfinance Institutions and Money Lenders Act. Now, realize that the microfinance institutions and the money lenders operate different products, give loans at different interest rates, they operate in different conditions, and they even have different collection methods. So we thought in the regulations, they should actually have categories. What clauses apply to who? So that we can know that, just like in the Act, because if you read the Act, it has those different categories, isn't it? So the same should be done for the regulations, so that we can know which clause applies to Tier 4 and which clause applies to money lenders. Then clause 3A. There was a proposal, I think it was already highlighted as pertinent, that a money lender shall not charge interest rates. Tier 4 a money lender shall not charge interest rates amounts exceeding 100% of the loan, principal amount, and loan-related fees, and charges as a total sum payable by the borrower for any selected long-term period. Now, we have an issue with this because it is like a capping in this guide because of the facts we're going to share below. Now, the first thing is that this is an indirect capping. Why? Because if I gave a loan of 10 million and the client took it for 1 month, but probably because they could not pay in time, extend it for probably 3 months, or probably we go to court for like a whole year or 2 years. Now, if you look at it in detail, the client actually, if he's to pay the money not beyond the principal, I'm out of business. Let me give an example. Give an example of the bank. If a bank gave you a mortgage or a loan of 100 million at 16% per annum, in the period, in the 10th year, you shall have paid about 160 million. This is beyond the principal. Now, given the mix, for those who are lending understand, given the mix that has been happening in the industry, and the knowledge that our borrowers have, someone will borrow and know that I have this clause protecting me, dilly-dally in court, ultimately even go and invest the money in some other business, knowing that even after 2 years or 3 years, I'm going to pay the same amount or the amount below the principal that I took. Now that will not be protective of us. The other thing is that we have a regulation on government liberalization, a liberalization policy. So we ought to look at all the other laws. We shouldn't look at the regulations in isolation of the other laws. Because if I'm operating in a liberalized economy, I ought to be treated similar. So let's consult all the other laws where the prices are determined by forces of demand and supply. So we request, it's our humble request, that probably this clause is removed because it is tricky and it does not favor us. Look at our colleagues in the banking industry. They don't have such a clause. They've been charging money beyond the principal. Because at the end of the day, some clients go hayway and you actually have to cancel it in courts of the law. Whether it's a good client or not, ultimately the loan can go bad. So this clause is really a challenge on our side. Clause 3b, Roman 3 and 4. There is a usage of the word, I think this is a typo, you will rectify it. I may not have to. You'll change it. It's a simple matter. Then on the lender to display prominently its interest, standard fees, and charges. Now, we propose, I understand that Umra gives the bracket of ranges. I think we're comfortable with that because it tells you when you're getting a license, they ask you what range of the rate are you comfortable with. Like, I'm going to lend between probably 5% to 10%. So we are comfortable with the range, but tightening it to one rate might be tricky, because you can imagine some of us, our companies have incentives. If I lend a client and he's very, very good, the following time they are coming for a loan, especially big money, we reduce the rates. So you can imagine if you put a static figure of 8%, and I want to reward my client because of the money he's taking and the relation we've had, and I want to reduce the rate to probably 5%, and then I have to seek approval of the regulator. Isn't that tricky? It is tricky, yet my intention is to support my client. So we propose that we continue with the range of the rate, but also in revising this clause, we should only put it on increase, like for someone who wants to increase the rate, should be the one to seek redress with the regulator. Because anyone who reduces the rate is pro-client, which should be in good terms with the regulator. So it should not be changed, but rather whoever wants to increase the rate should actually seek redress or approval of the regulator. But if I want to reduce the rate, then it's to the interest of the client, so I shouldn't actually be seeking approval. So that can be revised accordingly. Now, there is another clause that is very interesting. Clause number 4, subclause F. It says that we are meant to disclose to the borrower the total cost of credit. Fellow lenders and colleagues, you well know that when you're lending the money, you don't have it in mind that this person is going to default. And the default of this person has a cost implication. I'll have to instruct my lawyer to probably write a notice. That is money. If they have a collateral like a vehicle, I have to instruct my bailiff to go and collect the vehicle. That is a cost. There are a number of costs. Now, the point of dispatch of the loan, I am not aware of which costs will apply to this client, which then ties my hands if you say I have to disclose everything to the client. So how the client turns out determines what costs to apply. So putting this clause is a little tricky. So we may need to have some clarification or probably revise this clause to favor both the lender and the borrower. Clause 6.1. I'm also winding up. It's not a very long. I've been jumping a few clauses, so you bear with me. Clause 7.0. I've jumped 6.1 because it's a typo thing. Promotional materials to be fair, clear, and not misleading. Colleagues, you'll agree with me that misleading is relative. Someone may tell you that, even highlighting the interest rate is misleading, even when you lend to them at the very rate that you stated. So we seek clarification, but also to keep the words that can be, clearly measured and implemented. Then, on the lender to ensure no incomplete representation as to the interest rate, costs or charges payable under credit facility. It is inconceivable for the promotional material to have details. You can imagine if I have to put an advert out of my company lending out money. We appreciate that highlighting Umra as our regulator is okay, just like the banks do. But you can imagine if I have to put the cost of credit, put the loan method, put the collection method, put the product. Now, for those who have done marketing, that advert will be so congested. And I'll have wasted my money to actually put that advert. So it is our prayer that we highlight probably a few things that we can benchmark from our other players like the banks. Like, I'm regulated by Umra. A few clauses so that I can also have some bit of gap to put my content that I want to put before the client. Otherwise, the advert will be very congested and I'll have wasted my money to advertise with all that information as a requirement. Because the client can actually pick out one thing that you missed on the advert and say, this thing was misleading. As a matter of fact, I'm not paying this loan because I was misled. and then you start fidgeting in the courts of the law. So we need to support the clients as they support us. The other clause that is very pertinent is clause 8, subclause LB. Prohibition of bank savings as collateral. Now, bank savings could be fixed deposits. Bank savings could be government bonds and bills. Bank savings, all these instruments are actually allowed by banks. You can access credit against your bond, against your fixed deposit, because these are cashable. So, this clause that bars clients from using their fixed deposits or bonds or any other savings as collateral is a little tricky. So we request that it is removed. Why? Because it will even disadvantage our clients. We understand the spirit with which this was put in place. We know that there are probably some lenders that collect savings and they're not meant to collect savings. But it can be phrased in a different manner to address the actual problem than phrasing it this way, and then ultimately we shoot in our own feet. Because savings globally, bonds, they can be used as collateral to actually acquire loans. Clause 8, subclause 3. Disposal of collateral. Same thing as I highlighted. We need to consult the Simple Act. You know Simple? Yeah, Security, Interest and Immovable Property of 2019. That act. And also the Mortgage Act. They highlight how to dispose of some of the collateral. So we pray that these regulations liaise with those acts so that the laws, the different laws are consistent. And also realize that in the law, the other laws that existed prior take precedent. In this case, the Simple Act and the Mortgage Act will take precedent in the courts of the law. So the subsequent regulation or law that comes in place should be in sync with existing law. So this should be looked into in the disposal of collateral, like land. Then second last is 11D, the 14 working days period provided for the cooling off. First, you appreciate the cooling off. It is in good spirit, and it's a good thing. But you realize that money lenders are in business because we do what we call bridge financing. We do not finance clients for a long term. We leave that to the banks. So a client has a problem for 1 week or 2 weeks. He knows I'm going to come to Junaki and apply for a facility, and I have a cool-off period of 14 days. This guy is going to solve a problem in 5 days or 3 days, and they come back and bring you the money. And he tells you, I am cooling off. And he tells you, I'm cooling off. But in your cooling off, you're uncooling me. They are hitting me. So it's a big challenge. Now, if I'm lending at 8%, someone will come and say I'm cooling off at 2% or 3%. Ideally, if I get 10 clients that are taking probably 300 million each, and they have all cooled off, they have literally taken at 2%. It is bridge financing. These guys come when they're processing bigger loans in banks, and they want, little money, 100 million, 50 million, to first sort out the key thing, and then they go for the bigger money, and then pay back. That's why we don't do long-term financing. So we pray that this cool-off thing should favor both the client as well as the lender, because if you kick off the lender, then it becomes tricky, because the client will not have access to the money. And yet this bridge financing has been helping a number of... I'll give one scenario. A client has a consignment in a bond or a warehouse. URA has put an embargo. You cannot sell. And probably the client only needs 50 million to seal off a consignment that is worth 1 billion shillings. The bank is dilly-dallying. It's saying, come tomorrow. You know banks. After 1 month, he comes to Jonaki, says, I need this money. You finance the guy, he clears his consignment, his URA, he sells the thing, and meanwhile the bank thing is processing, and then they are happy. And they also happy, the lender. So we pray that apart from the Saturdays and Sundays excluding, but let us reduce on the call-off days. They will get us out of business, honestly. So this should actually be revised. And then finally, that whereas there are big boys in the lending industry, but there are also small boys. But also it is important to note that the big boys started as small boys, isn't it? There is one clause in the regulations, 11, clause 11, subclause G, that says that whoever takes money above 3 million is the one who is entitled to a cool-off. And yet there could be a borrower who probably is consuming 2 million or 1 million or 500,000. So why do you treat me discretionary or separately from the person who is taking 3 million and above? If it is cooling off, let the cool-off flow on every client, because they deserve it, based on their capacities. You may think 3 million is small money to some, but there's a person who tells 2 million is enough to change my business arena. It's what keeps me in business. So let this cool-off thing, don't disadvantage the small borrowers, because you also love our small clients. Actually, some of them pay very well. So let the cool-off cut across rather than applying it selectively. Ladies and gentlemen, thanks for listening, and we pray that these admissions are taken in good heart and considered. Thank you so much.
Before you go, thank you so much. But we want to have a win-win on this, especially on the key provisions. One, on the limit on loan tenure. Another one, on the limitation in regard to fees, interests, and charges, which should not exceed the principal amount. I think the win-win here is that we can adjust the cool-off period, or if possible, be silent on it, because the justification you are giving is that you give short-term loan. So are you in agreement? That is just for us to think about. Are we going to be in agreement that the money lenders should adhere to this regulation of the limit on loan tenure for the 6 months? If that is the case, that is now the challenge. You want to exceed 6 months, but you don't want, you want to have provision, reservations on the cool-off. Then the other one, you mentioned about the limit on charges not exceeding the principal amount. But you have not proposed what if that is too restrictive, what do you propose? Because we need this. We moved away from capping, okay, for the reasons which everybody has mentioned. So what do you propose? Because we should at least have somewhere where we should stop charging. I agree. You can say something about those two, then we open it up.
Thank you so much. On the last one, I think we shall have a discussion amongst ourselves and then propose, because this thing came short notice a little bit, we can think through of an alternative, because ideally if we maintain this, it is capping in this guise. It is capping in this guise. So we can think through of an alternative and probably can give feedback by tomorrow. Then on the tenure of 6 months, we shall still discuss, but I think if we are doing bridge financing, 6 months is realistic. Ideally, if you explain to all the lenders the mind behind all this, then they will get to understand and know that the period of 6 months is really, it is okay. It is okay. I am not concluding on other lenders, but we shall have a discussion. But if you explain well, if you're in bridge finance, unless there are some lenders that are lending long term at those rates they are lending at, but if it is the same principle and explained well, they should be agreeable to the tenure, the period of 6 months. It is fair enough. Thank you so much.
Thank you for your views, Uganda Money Lenders Association. So that is it. Now I think I hand over back to the moderator, or the MC, to guide us on the discussions. We can have comments, questions, clarifications, which should help us to address finalize the regulations. But please, let's brainstorm and agree on those two key provisions. The loan tenure, because the rest I think I have not heard from you, but from Uganda Money Lenders Association, I think the rest we can have them adjusted, but we need to get back to top management of the Ministry of Finance, saying that, Ben, over to you.
Thank you so much. Take us through the PowerPoint presentation as far as the topic is concerned. Because of time, we'll have the Q&A before the first parliamentary council presents. I think we can enter the Q&A.
Giving us views. You have all seen what is on the slides. I know we have to go brains in this forum. I believe that the institution sends the go brains, and also the Reform Commission and as Parliamentary Council, they are in charge of coming up with these proposed regulations. As also Umra, we have also our legal brains in the House. So we open it to you. I believe you have been taking notes on where we should have amendments on the proposed regulation. Any questions?
Okay.
Thank you very much.
Some of the issues, some of the users, can they put in some of the payments, right, so the 100%, then the 6 months, why the people be adding on some codes? For example, if the cases is then we can another code to pay the last business and the example is you can be put in the code and you know that you just put the 6 months, then DCP and 1. Then to me my issue that I'm thinking that you cover the advertisement to our money and that to the whole program. Maybe I may not continue, but me I had my individual. I have an issue for us in so every day the public servants, you don't know where they put your number, but every day you are receiving more than 10 messages.
Actually, those are non-depositing microfinance institutions. 90% sending messages to public servants.
Plus the 10 codes. So, I don't know. That's what now you are going to be responsible with that one.
So that is a question to the payroll lender.
Thank you so much for the presentation. My name is Amanda, General Manager, Gorissa. Yeah, on behalf of SACCOs, when we come to interest rates, the money SACCOs use are mobilized within members through savings. And you have to have an attractive interest you offer on savings for people to give you money. That means that the lending will depend on the cost of capital and the operational costs. So that's where you base to determine your interest rates. And many times these interest rates are determined at the annual meeting. So do the member decisions at the annual meeting to set an interest rate affected by the interest rate we are setting. Then the other issue, can we have a range for support? That's the previous speaker said, that we have these regulations that is split for the different categories of lenders. So that because the conditions that apply to us are totally different. That's one. Then the other one is the 6-month loan tenure or the period for the loan, 6 months. You know how most suppose one. But the suppose have their policies, some of them even going for 3 years. So what shall we do for these supports? Or can we also have a range for them in the period? Thank you so much.
And thank you so much. That is noted from Rory Sako. Yes. Yes, Minister of Trade wants to answer.
Actually, my fellow co-partners has raised a very good question. Point. There is what I would say that you can't find the interest within the course of the contract. As we are raising, for us in property, this is a general meeting that either we suggest an interest rate if they are thinking power for our property. And the general meeting approves the change of the interest rate. Now, how will it be for those members who are already having a loan with the TACO? We will not say anything behind that clause that you can't find the interest rate during what when the contract is already there. 2, remember for us in TACO, it is member owned, and we are the only customer. So it means the owners are changing their interest rate within themselves. How will we think of some of the problems like the way we are connected with my brother to cater for the different scenarios within our different operating level that we need.
Thank you so much, MT. Maybe for the Glory Circle, 6 months is proposed for only money lenders, and it will be so clear in the regulations that 6 months is proposed for money lenders. Then they are talking about variation of interest rates. In a circle, if I took a loan of 10 million at 10%, if AGM sits tomorrow and they agree that it can be lending at 15%, you come back to change my agreement, who is already having a running contract? No. So variation of interest rate applies that if I took a loan at 10% and in the middle, you're informing me now that loan should be 15%. That is the variation of interest rates. That's what it means. Hanging.
Okay, that is noted. The other hand is stable.
Thank you so much. First of all, my name is Cyprian. I'm organizing the Gentlemen Lenders Association. Just following the questions or comments. I appreciate the fact that we are out there, Umra and the rest of the regulators are out there to protect the borrowers. But very little is already said about the other guy, the lender. There's always public outcry, borrowers, protecting borrowers, big ABCD borrowers, and very little is said about this guy who is actually supporting the one you're protecting. And we very well know that their businesses may as well not run or survive without the one lender. There's a lot that needs to be put in terms of funding for the regulators or for the state bodies to educate the borrowers. Very little is put into it because you talk about the unlicensed lenders, but you do not educate the public to differentiate between a licensed lender and the unlicensed. be on the lookout for these guys. So they're the guys that come and smear the license. So a lot needs to be done to sensitize. I don't know, maybe you need to fund some of us and we do the job for you, because we reach down there. Where you can't reach, where you do not have the manpower, we do reach. So I think the more you work with the Uganda Management Association, especially the licensed guys, and those that are paid up members of the association, the easier the work will be. So let's not push so much. We have to run against lenders, but you do not know. I do not know how many complaints Umra has received from lenders about the defiant borrowers and the defaulters, and how many they have actually solved. But I know very well of many borrowers that have run to you and you have listened to them, and probably some things have been settled. So encourage the lenders also to come to you if you have the mechanism to mediate and settle their issues amicably. We were talking about charges being made about the loan. And then I realized in the presentation there's going to be an extra cost of a translator. Now that we have majority of the borrowers actually do not understand English. So now you have to incorporate in, you have search fees, you have processing fees, now you have to pay translation fees for someone to come and translate from English to any other language that the borrower understands. I do not know how that is going to really work out. And someone will come to court and say, they did not translate for me, because there is no one to prove that there was actually a translator, unless you employ one. So I thank you so much, and some of the regulations, if things are not, I had the AD presenting on how much, ever since this came to play, how much revenue the government has gained from this industry. So if it is not broken, why fix it? Thank you.
Thank you so much, members. Going forward, I think let us be there. Since we have some of the things we're going to hit on the presentations, let us not go back to those particular things. These are 2 and 8. If you have a question, please raise it up as far as this evaluation is concerned.
Good afternoon, everyone. My name is Martin. Mine is just a suggestion of intergovernmental process about risk-based pricing, where you're able to determine risk to that line outline the strength that is the part of the risk. So, me, I was saying that this is very important. However, CRR is again a very important role. And what I've seen is that new creating all these CRR here is also a CRR association. So my suggestion is that let all CRR users come in the room so that they will offer solutions to some of us who want to apply some of these techniques in order for the customer benefit, for a good customer benefit, and also punish those customers that are not doing very well. Thank you.
Thank you so much.
Maybe to guide the questions, kindly approach a question that will add, that will improve the regulation. Let us not be off.
Thank you for this meeting. My name is Robert from Kuala. I have a concern. If I registered with Umra at a rate between 10 to 15 per month, and I got caught, and I'm subjected to 24% per annum, yet with Umra I'm
question, but it is already guided in the law. Existing law is guided. Any other question? How can we answer him immediately? Yes. Sheila, can you answer? Okay. It is already guided in the law that if the court sees it wise that you charge exorbitantly, the magistrate or the judge presiding over that case can rule which interest rate you can charge at that moment. That is how it is stated in the law. Because interest rate is not capped, so the law empowered court that if the magistrate or the judge sees it wise that you charge me exorbitantly, they can decide which interest rate you can charge on that case that is under review in their court. So that is why maybe they ordered that you should charge 24% at that moment in that ruling. Yes, I'm sorry. Yes.
Our letter is completely different from the bank. These banks that you see, we give them our savings. When you, for example, I went and I wanted to know about the overdraft. Like in case we are short of money, how can the banks that have been keeping our money also help us if they are shortage? And they told us that every month an overdraft is 5%. That's a bank that is keeping our savings. Now me, a lender who is outsourcing from different sources and different rates, how do I go to a court that I'm expecting some justice and they subject me at 2%, yet I borrow at 7% or 5%? Which of these?
Thank you so much. I believe the legal person from Platinum wants to address their question before he gives us his. Oh, Sheila wanted, sorry, Sheila can add.
Good afternoon. When you go to court in the matter of business, so if you are able to go to court and borrow by 5%, the money you lend is borrowed 5%. There is no way any district or judicial officer is going to be borrowing 5%. When they reopen the transaction, they do not only look at the agreement, but both parties are accorded an opportunity to act. So you must be good at your defense, or the lawyer must be good at your defense. And if you present your evidence well, I believe you will get one. Unfortunately, we as criminal officers do not have any authority or any right to intervene in court decisions. So the best we can advise is that make sure that you have good defenses and good advocates.
Thank you, Counsel. We can move to the legal person from representing the federal lenders. Maybe you can first address the question why you send so many messages in a day and 4 to 10 times.
That is outside my but thank you, Madam Moderator. Elvis Brenda is my name from Namara Federal Office. And this meeting I represent Umra and I'm a Unfortunately, I came in late and the data was presenting. I wish we can have it on the screen about the principle of consumer data. I would like that's the question of that. Then to just beef up Sheila on what she was saying, I think that question is not, it's not the right people to address it. Umra is an institution which is independent of the court. It's not independent, and each case is determined on a case-by-case basis.
basing on the facts that we present. So when a decision has been made by the judicial officer, it is deemed to be a decision as made, determined in that particular case. So we cannot come here and start discussing matters of law, those can be addressed in other forums, and where you feel you are not comfortable with the decision, you have the right of appeal in the higher court and to the Supreme Court. We'd like to thank the presenter of Mandarin, and most of the things have been addressed. But my concern is on the issue of the laws that are in existence in regards to recovery. That is the Simple Act, the Mortgage Act. And here in particular, I'm looking at the 60 days which have been put in the regulation proposed. They already exist actually. We have a situation where, with regards to chattels, mainly, on our side we find the 60 days being too many, because we realize most of these loans are short-term loans. The chattel depreciates. Now, in most cases we find these lenders, they are selling both these chattels at loss because they depreciate. And 60 days we find it's too long, so we may have to depreciate. Yeah? With regard to recovery, if it is a chattel, what can we do to recovery under the chattel? And if it is a chattel, what kind of a chattel is it? Is it a machine? Is it a motor vehicle? So that we have them not to just manage it as a whole. That will be my concern. Then on the issue of the consumer lenders, there is where it was indicated, unfortunately I am not very familiar with the regulation, about the principal amount lent. What, in terms of, I've not looked at that code well, but in terms of recovery, that you should not exceed the principal amount lent. 100% of the principal amount lent. You realize that most of these consumer lenders or salary lenders, they keep out small loans, and you find they are lending 1 million, 2 million, 3 million. Now, when they default, when they default, the costs exceed. So when you cap it at that, you default in them out of business. And so we need to look at that. And propose we don't cap it that way, because most of these salary loans are small, 3 million, 2 million, 5. There are so many. My friend from Bangladesh should be able to identify this. I think basically that's it for now. But as we try to protect this regulation, remember, as she has said, we are dealing with the borrowers who are very, very tricky, and we also need to be protected. Because these guys don't talk, that they are making a lot of losses. So how can lenders also be protected this way? Lenders also not always be patched in the corner, because they are finding it difficult to collect.
Thank you so much, Council.
I'm saying, Juma behind, we are taking note of what Council mentioned. He's proposing, but he has not mentioned what proposal should be his opinion. He's proposing we should review the 100% charge on principal, get it right? Yes, 100%. So basically, stakeholders are saying, us in business, we are saying, why shouldn't we charge beyond 100% when someone has reported? I can give an example when top management and one minister mentioned one of his friends was losing his house. A house worth 500 million, a lender lent 100 million, but because of default, this person went up to 500 million, and the friend was losing a house. And these cases, I think, have happened before. So I think it came in that kind of spirit. Then also, we have teachers. You let a teacher 5 million, and the teacher is a government, is on payroll lending, and this teacher is meant to pay 15 million. The principal is 5 million, but the teacher is meant to pay 15 million. So it came in that spirit of coming up with 100%. Unless you can say that one is not happening. Because we are lenders in this room and we know what is happening. So when government comes to protect the consumer, the public says maybe the rules are not good enough. So it came in that spirit of not exceeding the 100% principle, not saying that total with outstanding with interest and other charges. So that is how that 100% came in that spirit. It was discussed extensively, and like different people gave examples and what story. It means that it has made close to 400 million. If you remove expenses, maybe the lender has made 200 million and 400 was expenses for maybe legal and other administrative costs. So it came in that spirit. But we shall extensively discuss this with the Reform Commission and First Parliamentary Council and other stakeholders. They will find a solution.
Thank you very much.
I believe First Parliamentary Council and the Reform Commission are taking notes where they said we benchmark for Mortgage Act and Chattel. Chattel gives a very less period of liquidating the assets of all the Chattel. So they are taking notes, and it will be, we shall of course reference from those regulations. Yes, Mr. Dumo?
Yes, thank you very much. So I wanted to comment around on the good period. You know that in mobile loans, you have customers who take 3-day, 7-day, 14-day, up to 30-day loans. And the cooling off period in the regulations actually, in some cases, outstretches some of the terms in existence. So I think when you are coming out with that clause, bear in mind or maybe differentiate what you apply for loans. Then I just wanted to also clarification on early settlement. When you are speaking to early settlement, did you mean to say that if a customer took a loan at X% and they decide to pay it early, they will still pay that loan and that interest, but no other extra costs? I just wanted to raise clarification. Because we've seen cases where customers say took a loan for 30 days, for example, and they get the money from the first days. Are you saying that they should be able to pay that loan with that first interest, but no other costs? Which is, I think that's what you're confirming and that's what you're trying to do.
Because of time, we are currently 12.
Mr. Jumo, we are taking into consideration that digital loans, yes, because digital loans 7 days, 3 days. So as earlier suggested by a representative from Ministry of Trade, we shall put disclaimers. This applies to a sample for an entity, for money lender, a digital loan provider, because pulling up will not apply to a digital loan provider, given that your loans are 7 days, 14 days. Yes, we have taken note of that step.
Thank you so much, Minister, for the presentation. When we talk about transparency, we indicated that we need to discuss interest rate. Now that we know, I would suggest, apart from the interest rate, we go ahead and then show the computation method for interest. Because some are charging flat, and some are charging declining. Why am I saying so? We have many companies whereby the client is paying a good money at 4%, and declining. The institution is saying you gave us that rate, but when you fix the loan agreement, you find it's just plain. It's open, just indicating 4%. So I suggest to add the computation method where declining or flat. Thank you so much.
And then, how many questions to read?
Thank you so much, a representative from Amfield. In a detailed regulation, we have a computation of interest rates. This one is only in the prevailing regulations under money lender regulation. Computation of interest rate is talked about. But when you go to NDTs, it is not talked about. That is why you even and they say we are not prohibited from taking what? National IDs. It is only in the what? In the money lender regulation. So that is why we are bringing this comprehensive regulation to cover what was mentioned in the other regulation and it is missing in this regulation, and entities are taking advantage of that gap.
Thank you so much, Umra. Dialogue and so I wanted to appreciate the comment about the experience in which that 100% came up and how someone got 100 and did about 500, and I believe in the previous. I hope we were able to present money when we clearly communicated that please. That's a good spirit. That's a good spirit. Look at it. Look at the good spirit in. And in any case, and we hope that this should not apply to when they are being involved. And as you look at that good, and you look at it in that good spirit, my only concern was, have you looked at it in the same, have you looked at other sectors of our economy in the same spirit? Someone may import a pair of trousers, a container at 100 million. This person is free to sell this container at 300 million. But the money lender is not free to contract that. Let's look at the situation similar to what you are saying for banks. Banks, just like money lenders lend money and sometimes they default, and by the time you are paying the bank, if you are not careful, you cannot track your payments, and there are penalties on penalties, and compounded interest, in late payment charges, etc. So I think I actually really appreciate where the spirit and where it was coming from. My concern is, why are these money lenders or these tier 4 microfinance institutions being singled out in the pool of other business sectors in the whole country? That is where I think we shall find a way to divide. We wake up and we say, you know what, for all people who are lending money in the country. This one is our money. It's not deposited money. Our money, which has a higher cost. Meanwhile, we also borrow from the same bank. When you borrow from the bank has no cap in interest. But for you, whether the person delays to pay, you have a cap. So I just wanted to bring it from, as we are thinking about fairness, spirit, how you look at it. Also, be fair and think about the same spirit for this business person who wakes up, sells his plot of land, gets his 10 million, gives 5 million to someone, person is paid to pay, he follows up, 5 years later, the person owes 15 million. Actually, 15 million is higher than 100%. Oh, let's just be fair. And let's not put in place a regulation which is going to end up being challenged successfully in the courts of law, and then you find that thing you are doing.
Thank you so much. It was adding on something.
And the issue was if the prices before 100% for the client, which would be affecting the cash conversion of the lenders. For example, if someone has taken money for 6 months and they know that you cannot collect more than 100%, this person will go ahead and also stay in that 6 months. How does this affect our businesses? How does this affect the cash conversion? So can we also suggest that this should be done for clients whose status is being encouraged? The person has been paying for all the months. The status is encouraged. Because otherwise the person may decide to pay the very last month and the cash conversion of our business.
Thank you so much.
Yeah, good afternoon, good morning. Good afternoon. Martin Magizi, Bank of Uganda. My view, this view is not my personal view, it's not a view of Bank of Uganda. Now, from their submissions, I think, in my view, these regulations are addressing a normal situation. We're not addressing the defaulters, because when now we start talking about charges that are applied to defaulters, now that's an extreme case. I don't think these regulations are addressing such scenarios, because even in that scenario, you don't know the kind of fees that you will be, that you will incur in the process of collection. That's number one, and that's my personal view. The other question or comment on capping of interest rates, and I think the Director's Provision at Umra mentioned it, that the intention is not to cap interest rates, because we are dealing in the policy is we are dealing in liberalized markets, and the policy has not changed, right? The policy has not changed. So now this is the view of Bank of Uganda, not my personal view. We are against capping of interest rates for reasons that have been highlighted. It's a liberalized market, but also, I mean, the Director's Provision has mentioned this, so I'm adding my voice to it that the view is not to cap interest rates, because what they've been tried elsewhere, like in Kenya and other countries, and it never worked. So I think we've been very consistent in that message, that it's not a good thing to cap interest rates. But maybe we can look at charges, fees, penalties that institutions bundle on customers. And I think those are the things we're talking about in this regulation, so that it's transparency.
Thank you very much for the question. as the engagement was right, although some questions keep getting, some people think minds that are ready to conceive. However, I picked out some questions that we needed to address. For example, on the matter of 100%, we are thinking it that the 100% is actually not addressing the concern of the data side. But what we are saying indirectly is that the lender take calculated risk. Look at the borrower and assess them right. Because what has been happening, which we have also seen, is sometimes you have been in a hurry to lend the money. Look at who you're lending the money to, because these messages which trade is talking about that come out, sometimes you feel as if in our market money is being pushed. We have to come and pick it. We are all seeing. Please take calculated risk on your money. And maybe what you also did not mention, if we refuse to take the regulations, we are still moving onto another level. The level we are moving to is creating a loan law. This Uganda should make decisions, and I'm trying to address your question. If all others are investing in the money they want, why this tire for? Why lending business? The people who are doing the 300% profit you're talking about in the market out there, we are not sure of them. But this is a documented business. You are writing everything. And so we are saying, is it fair? And this is how many businesses run elsewhere. We have to take the best practice and continue with it. So basically what we are saying here is, be careful when you are lending. And if at all you are not saying not 100%, then what? You have not experienced that sort of thing. Then the other question would be, if 100%, yes, it includes default, then if it doesn't include, then what? You see, we have a market that we are saying is almost failing if we don't put this in discussion with all of us. When we are sober, let's all be sober, because to be honest, tomorrow it will be your brother who is in the side corner. They left them 100 million, they are saying they are taking 1 billion and they are taking them, and it is even impossible for them to get. So what to expect? The government has to come in and intervene. And then I also heard people say, you are caring about only borrowers. But even in my small brief comment, I applauded lenders for entering this business. Because you are necessary, you should be there. We need this market to thrive. Because even the banks are not serving our people sufficiently. So we are not coming to attack later. Don't take us like that. We want you to exist, but they should also exist because they are your customers. And then on the matter of the pulling off for digital lenders, you've already heard that we are planning to, in the regulation, we shall be specific on who it applies to, and then we take positive comment on categorizing interest rates, being clear that it is declining or flat. I am aware, because we have seen some loan agreements that are not clear at all. At some point they talk about declining rate, reducing rate. At another point they talk about then it becomes flat, then it becomes not clear. 3 positions on the same interest rate. And those of the people who have come to Umra to complain, we have undone all those because the law allows us to. So please, whoever is on the lending business, even when you are coming up with the loan agreement, let's be very, very clear. That is probably why some when you get into court of law, then the judge will look at that ambiguity and then ends up making the decision. because it is not clear. So if you're not clear in the system, that will be bad. However, whatever we are doing, I can assure you, we are putting everybody into the picture, including vendors. And I want to assure you that we are interested in your business, because if you are not there, even Umra is useless. So just know that we want to support you, but also come with very good proposals. If you are not saying, if you are saying 100% is not good, then what? Then we now depend on what you are proposing. Thank you so much. Madam, it's okay.
Thank you so much. I want to appreciate the things that have come from the members of GOTV. And I want to start from the point that we are all stakeholders in this industry. We have our customers, we have the lenders, we have the traders. So we are all stakeholders here. And the best that we need to come up with is a win-win situation, as stated by one of our colleagues earlier. Now what I note is it appears like that the regulation and Umra, people perceive it like they are only on the side of the customers, which we need to dispel here. Because at the end of the day, the lenders do not see clearly how the issue of enforcement of the contracts helps us. When we lend out this money, all is about the customer protection, which we all believe that we need to protect our customers. For one thing, whom are we lending to? We are lending to our brothers, we are lending to our mothers, we are lending to our sisters, we are lending to people who belong to us. So I do not see how we, the lenders, we really want to exploit the people that are lending, yet these are our own people. So I think we need to have that in mind. But just to the regulations, that how do we ensure enforcement of contracts that protect the lenders as well? Because it is the enforcement of those contracts from the lender's perspective, which is a little bit of anything that we need to really factor in. So that when I am lending the money, I know that I'm also protected because the contract that I have entered with the customer is going to be enforced in the dot, so that I also recover that money without getting into situation where we're having 100% and so on. Because most times 100% we're talking about comes because we have failed to enforce the contract that we take. That's when we won't go to defaults and so on, then we go beyond the 100%. But if we're able to enforce those contracts to the time frame that we agree with customers, it will be no way out we can have this go beyond that. Finally, I speak from the perspective of Umra. When you look at the laws that Umra gives, you realize that they lend the money up to a time frame of 84 months. 84 months is 7 years. If you lend a customer 1 million shillings for 7 years, telling me how actually that customer is going to pay money that is not going to be beyond the principle of payment. Practically, it is not possible because the interest is charged for the period that you are giving the money. That's what it is. So you are giving out somebody 1 million shillings for 7 years. And you know why they take 1 million shillings for 7 years? It's because they earn little money, but they want to get something big. So the only way you can get a big amount is by taking for a longer period. So we need to debate along those lines and see how somebody taking a loan for 7 years can be able to pay money that's the interest that's less than the principal that's given. Thank you very much. I appreciate it.
That's one. The last one.
We can have the last one.
Okay, thank you for the opportunity. I'll just start from where our senior colleague stopped. I want to believe that the logic behind the 100 is related to the 6 months. Because if you calculated having a loan limit being at 6 months with 100%, it makes a lot of sense. But when you take it outside the loan limit, then the scenario that he has presented comes into play. So I don't know whether the reasoning was specifically hinged on the fact that there is a loan limit period. Because the moment you have a loan limit period, then the 100% makes a lot of sense. Because within this limit, going beyond 100% would really be out of the consumer protection of the customer that we are talking about. So I think as we are discussing the limit on 100%, we need to first discuss the loan limit. The moment the loan limit is extended, then we would also now start discussions on this 100. But if we maintain the 6 months period, I think it's very logical to keep the 100. Then also I'm thinking that within this 100% that we are talking about, some people are giving scenarios of they have gone to court with this person and the case has dragged on. I think court awards those costs differently. It would not be awarded within interest. I want to believe that in this 100%, we are talking about the interest from the principal not exceeding 100%. But issues of the time compensation and the costs that you have gone through as the case is going on, those are costs that court awards different from this. So I think if we do those clear distinctions, you will be happy with this. As for me, I think it's very logical and okay. And lastly, just a comment. By protecting the customer, I believe we are protecting our businesses. So we should all be happy that once this customer is protected, we will stay in business. So let us not be worried about the customer being protected, because it's the survival and good health of this customer that will lead to the health of our businesses. So let us have peace with that. Thank you.
Smart 24, driving business.
For those who have been following TechBite, we have been talking about the Neuralink some months ago.